Welcome to Mentoring Moments. Mentoring Moments is a sub-series of the eCommerce Edge podcast. It is composed of clips taken from Jason's one-to-one and group mentorship sessions. Hello, everybody, and welcome to another episode of the podcast. And this is one of our Mentoring Moments episodes, but as we're starting to do a little bit more frequently nowadays, we're getting some guest mentors on to cover topics that maybe I'm not so deeply skilled or experienced in. And that's another one of those episodes today. And I would love to welcome to the podcast Jordan Salvit. Welcome, Jordan, to the pod.
Thank you for having me. I appreciate it. Thank you.
Absolutely. It's a pleasure to have you along for the ride today. And it's super interesting. We got introduced through a mutual connection, a mutual friend, a mutual contact, who this mutual contact had listened to my podcast. They had seen quite a lot of my content and reached out to me and basically said, look, I think you should get Jordan on your podcast. I think he's got some deep experience in the industry that is going to be super interesting and super helpful and super educational to your audience. It's not often that I get people reaching out to me on behalf of other people. Usually people are reaching out to me on behalf of themselves, but I'm very glad to have made your acquaintance. And maybe tell us a little bit about yourself, how you even came to be in this game. Look, you're a long-term business owner, serial entrepreneur, D2C brand owner. Look, you've done so many things in this industry, but maybe give us the short version.
Sounds good. Short version is I have been in the D2C space for the last 10 years. I started a subscription called KitKnitBox, basically a cat subscription box, similar to BarkBox, but we did it for cats. And I'm a cat person. That's what everyone always asks me. Oh, do you have cats? And so I'm sure there will be one that comes up on this desk during this podcast. And about 2 years ago, I sold that to a private equity firm and have since been advising and helping other brands, and just went through my first acquisition as well. And I not only advise other brands, I still own a brand as well.
And the thing that we talked about off air is that a lot of businesses and brands, and I see this across B2C, D2C, B2B, doesn't really matter. Everybody talks about wanting to be a data-informed business or a data-led business or a data-guided business. But to every business, what that means is slightly different. There's oftentimes not a consistent baseline of data to be looking at. There's often not a consistent baseline of systems to be pulling data from. There's often not a lot of consistency to the models applied to that data. And so therefore, the outcomes that these businesses get can vary wildly depending on their familiarity with data, depending on their ability to use and leverage data. And that's really, it feels like that is the space that you have really honed in on based on your experience. And now you've gone so far as to develop some tooling and some infrastructure and some technology to help deliver those services to D2C brands.
I think that's spot on. One of the first things that I noticed after my exit was I started advising a handful of other brands and realized that they didn't trust their data sources and they weren't sure either how to interpret it, and therefore that meant they were trying to reinvent the wheel. And so they were trying to understand, what is my lifetime value and or my lifetime revenue, and where do I pull that information? And what is my customer acquisition cost? What is my break-even point? They would ask all these questions, and they literally every single time, because they weren't sure who they trusted, they went and tried to reinvent how they pulled that data, where that came from. And so I said, this is the goal of what we do now, is to simplify that. Give you clear information that is consistent, explainable, to be able to make your critical decisions every day. And that includes what should be your primary focus. As the other piece that really drove home for me when I started this business and I started consulting and advising other brands was that there are, and I know this as a founder, I'm sure that you know this as a founder and a consultant too on this world and in this side, There are so many different distractions every single day, and those distractions can range from a customer service email that goes and makes us all go crazy. How could they have given us this question or 1-star review or who knows what, to what's going to move the needle the most in terms of our actual growth or revenue or things like that. And oftentimes the customer service email is the one that comes and takes us into a tailspin, when the reality is maybe we should be focusing our energy just on increasing repurchase rate, increasing average order value, or where that may go. So being data focused, having the platform behind us to be able to answer those questions is critical.
And I think you raise a good point, which is that systems of record, we like to think, okay, if I run an ERP, then it's my single source of truth. Or if I run a order management system or a warehouse management system, that's my single source of truth. Or if I run a point of sale system, that's my single source of truth. And what I've learned over the years is there's no such thing as a single source of truth for every single piece of data in your business, for a start off. And secondarily, the way in which those systems present data, harmonize data, cleanse data, unify the data can differ wildly across the entirety of the commerce stack. And so whilst you might have an ERP that sees all the orders that come in, let's say you're an omni-channel business, it sees all the orders that come in through your point of sale system, your website, from your social channels, and from your marketplace channels. It sees all the orders, but it doesn't necessarily have all the supporting data around everything that happened before and after those orders transacted through those channels. And then we have the unique issue of most websites being able to support guest orders for a start off, where the customer doesn't necessarily have an established account with you. We also have a scenario where something like 90% of point of sale orders are guest orders, because you don't know who the customer is and you're not gathering that information because maybe you don't run a loyalty program that's omni-channel. And then we have duplication of accounts, where one customer could potentially have 2 or 3 accounts with you under 2 or 3 different email addresses. So we've got a lot going on in our ecosystem when it comes to disparity of data, differences in the way the data is mapped between systems for consistency's sake. And so there's a lot for brands to deal with when all they want to do is sell more stuff. And so that's where I guess somebody like you comes in and helps them make sense of their data.
Yeah, I think that's right. And some of those questions we'll answer. Some of those questions we can't. As you pointed out, when I don't have a customer's information, for example, point of sale, or even Amazon, right? Amazon doesn't give us individual names and who they are. If we're lucky, we can figure out who the customer ID is and that they've repurchased multiple times. But it is critical to understand the impact, for example, of your advertising for your direct-to-consumer channel and how that's driving to your Amazon channel and how that impacts sell-through across the board. And so that's exactly right. We'll look at it and say, what is the aggregated view of your overall blended? So if I spend $1,000 today, how much did that drive to all of my channels? I spent it maybe to drive people to my website, but that also impacted people going to my Amazon storefront. I spent it, maybe I thought I was spending it there, but actually if I'm selling in Target, do I see a sell-through increase in Target? And again, maybe we can't create a direct mapping to say, oh, this customer saw it, but we try to understand the relationships between them. And because we're seeing so many of these patterns, we're able to recognize this is a likely pattern. And I'll give you an example. Specifically, let's talk about Amazon. But Amazon transacts about 60% of online purchases right now. People go straight to Amazon first. They learn about your brand. They type into search. They no longer type into Google to search for a product. They know the difference. They're like, hey, this is my product. I'm going to go search for it. I'm going to go straight to Amazon if that's my preferred place. Some of them will go to Google and type in a product and go there. But what we expect and what we see is industry standard is about 20 to 30% of people that learn about your brand for direct-to-consumer advertising are going to go to Amazon, and that's where they're going to buy. And so we see that, and so if we look at everything in a vacuum and say, oh no, we're only going to look in this one place, and we're not looking at this as a holistic view of the business or certainly of the online business, we're going to be missing that information. And I also like to bring that example up because so many brands are afraid of, let's say, going into Amazon, going into other platforms, going to a Walmart or wherever that may be, and because they're afraid that Amazon's going to capitalize and conquer their customer and steal their customer, right? But the reality is that's not going to happen. Customers are already loyal to Amazon, and that's just their preferred place to purchase. And you need to be where a customer is. And so when we're able to show that in a consolidated way and see and illustrate in a clear way that this is a value add and profit generator as opposed to, and that you're leaving money on the table and actually likely giving it to a competitor, that's the place where we can show that data and say, yes, win-win.
Wow, so much to unpack there. And I'll just start with the modeling to begin with, and then we'll get into the technology that you've built and a few other things. But it feels, and you can tell me whether I'm interpreting what you said correctly or not, it feels like you use an element of market mix modeling, for example, on the deterministic side, where you don't have complete data from a given channel. You have to take a more deterministic modeling approach to that to say, okay, I pulled this lever over here, and I can't track it all the way to a purchase and maybe even a return down to the customer level or even the channel level. But what I can say is when I pull this lever over here, this channel moves. And so it's almost like pulling on a thread. We can say, okay, we pull on that thread and this marionette puppet on this side moves as a result. Now, there are some channels where you can get super granular data, but what a lot of brands are struggling with is they're saying, okay, maybe we implement Power BI, for example, but then we only plug Power BI into our ERP, or we plug Power BI into our e-commerce platform. And we don't even necessarily know which type of reports, and they're all bespoke. We have to create all these bespoke reports to try to tie all this data together and to try to create these tenuous links between data that we may not even understand ourselves. And oftentimes, what I've seen with brands is they bring in maybe a data analyst or a data engineer or a data scientist that maybe has zero experience in retail at all. And so therefore, they have to get up to speed on what this business even behaves like and what kind of data sets are important to them and why, and start to create reports that have a direct impact on the bottom line of the business. And it feels you have to not only be really good in understanding data, but you have to understand the industries in which you're operating to a degree, and you have to understand the systems that you're working with too. Otherwise, it feels like there's going to be a massive disconnect somewhere along the chain.
That's exactly right. And that's actually why I got into advising and we started to build out this platform of our own, because basically I recognized I'm an expert in, number one, I didn't share it before, but my background is in computer science. And I always joke with everybody, Jordan, you're published in research in artificial intelligence and you went and sold cat toys. And I look at them like, listen, that became my passion. There we have it, but I can still do both. And I think this is exactly it. I came in and said, I'm an expert in in that technology side, but also in terms of direct-to-consumer and general commerce. And when I looked at it and said, we can become experts in Shopify. We have that knowledge and expertise. If you're on Recharge, we've got that expertise for these platforms, as well as how you're spending on Facebook and there. So nobody has to go and learn how to pull that data in. We already have it. We understand those connectors. We understand how to pull it in. And I think you're exactly right. So many companies will look at this and say, oh, we'll go build our own Power BI. But then they have to become those experts in each of those systems, in each of those technologies, as well as then becoming the experts in the data and how to process it. One of the benefits of what we do is make it plug and play, come on in. And you've got a valid system that we can help support. But really the extra piece is, I'll say, you brought up the idea of mixed marketing models or mixed models on that side. I'll tell you that's actually a much smaller percentage of what we do, because I'm not trying to come up with these extremely complicated mixed marketing models that are hard to understand. I can build them. We can build them across the board. But when you build a mixed marketing model, they come out with lots of numbers, with lots of weights, of things like that. If anybody that's listening doesn't know what a mixed marketing model is, it is essentially trying to take 2 or 3 disparate items, put them together and say, what is the likelihood that spending on Facebook, as well as spending on Google, as well as spending in 4 of these other places, had an impact to my revenue today? And so we figure out the different values that we pick out, but it doesn't give us a clear answer to say, Google, if I spent an extra $5 on Google today, I am guaranteed I'm going to get an extra $5 or not. And so really what we do, and what I think is the most important piece, is coming up with these kinds of structured tests. And when we talk about you've got to spend more, you're going to push onto, you'll spend more on Facebook, or you spend more on, you'll launch a new channel. What the value is that we have to be very, I would say, intentional about the structure of the test to make sure it's a big enough or small enough, or we know how we're testing it so we can properly measure what's the incremental impact to all of your down funnel streams. So if it is selling on Amazon, if it is selling on your own website, if it is selling in store and retail, so we can then say we spent $1,000 on in this region, we spent $1,000 on this new channel, and that generated $1,000, or it didn't, it generated only $500, and is that worth it? Is that in our threshold and where we want to be? And so I think of it as much more about structured testing than I do that the solution will solve it all. Because I think platforms, I think human elements are so valuable. Our own knowledge is so valuable, and that's where we're building in and want to be those experts to help support you so that all e-commerce and commerce brands can be profitable. My goal is to help commerce brands be profitable.
And that seems to be the refrain that we're hearing from most brands today, is the fact that, hey, in the era of zero interest rates and free money, we could grow in an unlimited fashion. Yep. Market share was our goal, not profitability. Brand recognition was our goal, not profitability. Yep. And all of a sudden, when the free money taps get turned off, or at least the cheap money taps get turned off, all of a sudden brands have to pivot almost on a dime. Yep. And they all of a sudden have to become much more cognizant of the levers that are actually going to get them. If they're not profitable today, what are the levers we can pull in the immediate future that can get us to profitability ASAP? And I think really what you're speaking to is unit economics. If we had to put that underneath an umbrella banner topic, yep, I think it's unit economics. And there's very few brands that I speak to that understand their unit economics, both holistically as well as at SKU level, as well as at channel level. They don't really understand the interplay between those three things. And so therefore, they can't rationalize their channel mix. Yep. They can't rationalize their target RCP or their segmentation planning and rules and lookalike audiences, etc. They can't rationalize their catalog and say, we need to cull every single year. We need to cull the bottom 10% or 20% of our catalog, but we can't tell you what that looks like we can tell you maybe what it looks like from a revenue perspective, but we can't tell you what it looks like from both a profitability perspective, also in terms of driving demand for other products in the catalog. We can't tell you when a product maybe that is a low seller, for example, but it drives significant sales of one of our top sellers, for example, or that 9 times out of 10 it's added to the cart with another top seller. So it's these types of data points, I think, that most brands, it's not that they don't want to know these things, it's that they don't even know how to get to those things.
I think that's 100% spot on. I'll give you a perfect example. You probably hear about people talking about cohorts, right? Cohorts. Let's look at how each of our cohorts are performing. How is our cohort from November different from January and February, etc.? And that is a critical start. So if you haven't done any cohort analysis to understand how your customers are performing, start there. Build out your cohorts, and then let's work on your contribution margins. I think that's really the key of what you're talking to. But to the other part of knowing what your products are doing, what we built out is the idea of a cohort based off of the first product a person purchases. And so that actually answers one of those questions you just brought up right here is, how do I know what I should be investing in? How do I know what product I should get in somebody's hands? And so we looked at that and said, that's a really simple question to answer. What is the first product we put in somebody's hands? And based off of that product, does that set a trajectory that is an increase of lifetime value by 20%? Does it go the opposite? Does it go down by 20%? Where do we want to be? If we put this first product in your hands and that's what it is, then let's try and scale that. Let's run a structured test to see if putting more of that product in people's hands or incentivizing people to go and get that product is going to work. And that is across the board increases then your overall ability to scale the business. Because if you're focused on products that drive lifetime value, then you can be profitable in a faster way. And I think it goes the other way too. If you cut the fat of the stuff that's just costing you money, you have more cash in your hand.
And the other thing that I think this leads to is that a lot of brands don't understand the interplay between the percentage of their catalog that is out of stock at any given point in time, and their conversion rate. And so what I would do when I was a merchant, and this is something that was new to every single merchant that I worked with, is that in order to get more cross-functional communication. So for example, as an e-commerce manager, you're not in charge of procurement usually, unless it's a very small business.
Yep.
But procurement and stock and inventory management have a direct impact on something as an e-commerce manager that you're normally KPI'd for
Yep.
like conversion rate. Now, I knew that if I ran a report at the end of a given month and I looked at the percentage of the catalog that was out of stock on average for that 30-day window,
Yep.
and then I looked at my conversion rate, as the out of stock percentage went up, the conversion rate dropped almost in lockstep with that. Now, that wouldn't normally be immediately apparent to a business because they oftentimes don't cross-reference those two pieces of data.
Yep.
But it makes sense from a human psychology perspective, because if I come to your website and I want to buy 3 things, and one of those 3 things is out of stock, it's unlikely I'm going to buy those other 2 things, because I'm going to want to go to another website where I can get all 3 things in one purchase.
Yep.
I can get my free shipping threshold easier. I'm going to get my loyalty points on that entire order through one retailer. I'm going to have it all delivered usually on the same day at the same time, so I don't have to be home at 2 different times. So there's a whole lot of human psychology that goes into
Right.
multi-item carts and composite carts. That means that these seemingly disparate data points have a direct correlation with one another, but you actually have to be looking at the data to know that it impacts a metric,
and
right?
You have to be an expert like you just have, right? You've come here and you've said, I've seen this, I know this. But if you don't know that, and this is the first time you've launched a brand, and maybe you just started, I think that commerce brands out there, direct-to-consumer, launching a Shopify website is like mom and pop stores of the 1980s and 50s and things like that. So everyone went and they learned by themselves over and over again. There wasn't a big enough network that we go and answer those questions. But to your point, this is an spot on. Out of stock elements, what percentage is there? I think there are a couple of things that ends up happening that people they'll look at and say, I don't understand what's going on. Bounce rates rise, and what happens then? Google deprioritizes your product, and now your organic search comes down. Now your cost per click goes up across the board. And you're like, wait, why are my CPAs going up? Why is this all happening? And it is exactly those kinds of simple metrics to identify and say, we just don't have enough product, or all of this product is out of stock. And unless you were intentional that those were losing money for you and you wanted to cut them out, it's a big problem. And I think that's exactly right. You have the expertise and the history to know, and too many people didn't have that.
And I guess you're democratizing access to that knowledge is effectively what you're talking about. You're saying, hey, look, I'm going to take, and we're going to distill down all of this hive mind thinking around some of these things that should be linked together and should be looked at in tandem and should be looked at holistically. And we're going to make this easy enough for brands to consume as effectively a service that they don't have to be expert in these 86,000 things.
Yep.
They're an expert in their product.
That's
and
right.
Knowing what their clients want and going out and researching what their clients want. And they're an expert usually in the marketing side, in the branding side, and having those conversations with customers at scale. That's what they want to spend more time doing. And they don't necessarily want to think about the granular minutia of every single data point on a rolling basis.
I think that's exactly right. So I've been working with a brand called Pipsticks for about 1.5 years now. And when I first started working with them, they have an impassioned community, and they're a sticker business. They sell very unique stickers, as well as a sticker subscription element that they have. And the reason I bring them up is they knew they needed to look at the data, but they were really just chasing one task after the next and weren't sure what was the first thing to look at. And when we came in, we immediately saw your community is great. How do we invest and drive more product to your community to increase what are they looking for? And then by figuring out what product your existing customer base is going to like, then we have the ability actually to broaden your entire customer base. And so give you an example with them specifically, they identified that their customers wanted licensed products. So they just launched a Hello Kitty subscription product, right? And it's specifically something they understood their customers, they understood where that was going to, how that was going to work and resonate with them. They immediately launched. They doubled their best day in one day. And then they've opened themselves up to a brand new market and a brand new demographic to people that are in the general Hello Kitty space. And that's the kind of stuff where by us giving them insights into the data, they were able to say, okay, now we understand better. We can focus on, as you said, listening to our customers, developing the products that are necessary to expand into it, and then it's a win-win.
I think we've probably seen a lot of that with Barbie. And I think we've seen a tremendous amount of that where I'm not even going to belabor the point, but obviously it was an incredible marketing campaign.
Yeah.
And I feel like there's some in the moment decision making that is hard to make. You can go solely on gut and say, okay, like in the case of these guys, they might have heard starting 6 months ago, for example, that this Barbie movie was coming out and see the escalating amount of marketing advertising that was going into this movie.
Yep.
And starting to witness some of the brand deals maybe that were being done. And they could have in their gut said, hey, maybe we should do a licensing deal for this because in 6 months' time, this movie's going to hit and it's likely to resonate with our audience. But I think what you're saying is it would be far better if they combined gut feel decision making with data. And so, yes, we're not trying to replace business owners. We're not trying to replace operators. We're trying to augment operators.
Yeah. And I'll tell you, another client says to me, my instinct is that I need to offer something. And they were talking to me about offering free returns. And they said, my instinct is I need to make it easy. It's going to help me on conversion rates. And it's going to help me on something else. And I said, okay, let's take a look and see if this is actually valid. Is this correct? And by taking the founder's gut and saying your gut is either valid or not, it gives you a financial dollar amount to what your gut is telling you. And should you invest in that? And so essentially what we always were pushing back on is to say, is this a big enough slice of the pie to save you money or not? And how should we test it? And so to go back to that idea of free returns, and I look at it and I said, actually, all of the people that have returned anything for you have actually cost you money. They've cost you millions of dollars. And when I look at it from that perspective, I say, can we ask these customers to go through some hurdles? Can we test making it a little bit harder? Can we test maybe a small fee, or can we test trying to push them into an exchange process as opposed to a return process? Because these customers that have returned product, they're never coming back. Your data shows that these people are never coming back, and that's the kind of stuff where somebody says, "Well, it's so necessary. I need to have that because otherwise my conversion rates are going to go up." And I say, "Let's test that. Let's prove in a quantitative way, because right now you're losing millions of dollars if you don't change that. And yeah, maybe it feels like your conversion rates are better, but your lifetime value is not." So those are the kinds of things that I would look at when I want to push and say, what is your number one priority? You have this return issue that's costing you millions of dollars. That's a big priority. You have a high lifetime value, but at the same time you're not scaling enough. Then let's figure out how we can scale and push in. Maybe that's through product development, like what we did for Pipsticks, or maybe there's something else that we want to play with.
And are you seeing one of the things I guess that I see pretty routinely, and I'd love to get some validation that I'm not the only one, is that brands oftentimes will look at revenue by channel, and then they will subtract out costs by channel, for example, and then that's as far as they go in terms of channel performance. And by the same token, they do the exact same thing with customers. They'll go, okay, this customer drove X revenue, and this customer, and therefore they've been buying with us for 2 years. They've made 5 purchases. Here's their lifetime value with us as a result. And that's where the analysis stops of those cohorts, whether it's channel analysis or customer analysis. It stops where I believe the data almost begins, which is to say they don't think about cost of service, either at the channel level or the customer level for that matter. They don't think about things like propensity to discount at the customer level or the channel level. They don't think about returns costs at the channel or customer level. And so therefore, they don't actually know what any of the net values are for either channel or customer. And as a result of that, they have these, and it works in most agencies' favor to simply look at a revenue number because it's easy to pull the levers to increase revenue when you're no longer responsible for profitability. And you're no longer responsible for looking at any of the other efficiencies that need to be driven in the business to improve overall business performance other than revenue. Because most agencies don't want to take any level of ownership of anything other than driving additional revenue for the brand, right? Because they say that's the business's responsibility. It's their business to make themselves more efficient, not mine. I'm not in control of their operations. I'm not in control of their buying. I'm not in control of their contract negotiations. And I think to me, that feels like a bit of a cop-out because if you have access to the data, you should be using it. It doesn't mean you automatically become responsible for the inputs that get that data, but at least you should be able to interpret that data for the merchant so that they can make informed decisions about all those operational things.
But this goes back to your point that you started earlier about each of these systems that are out there have their little silo of information that they own. And so you have your ERP that maybe has all your shipments that go out there. You have your marketing channels, and that tells you what the marketing channels are telling you. There isn't a source of truth that these, let's say an agency is going to look at and say, okay, I know in your business this is helping or this isn't helping, or where does that go? They instead want a very simple goal. What is the one goal or what is the two goals that I need? You want me to spend more money and you want me to hit this ROAS goal, or you want to spend more money and hit a CPA goal. That's all they want. They want to boil it down to exactly that because that incentivizes and it's an easy incentive for them to work towards. And it also allows them to, as you just said, point fingers at something else. That's not our problem. And that's essentially where I've come in and said, we need to help commerce brands understand that they have to be focused on contribution margin, number one. What is the contribution margin? Net of marketing, net of returns, net of all your shipping costs, your fulfillment costs, all of that. What is your bottom line contribution margin? And then you're totally right. Then what is the next level down below that, which are what are the operating expenses that are going to be scaling? What are the, as opposed to your fixed operating expenses? Because if we can do that, we have a true model or even tool to understand scale and profitability. And that's one of the things that I'll say I use this as part of my first couple of things I work with any client on. We build out an initial model based off of history, taking actual data, no model, no expected or future.
No forward-looking, projected, none of that stuff.
Okay. We say, this is history, right? Can we fill in your history, understand what was, and then we say, okay, let's take a conservative forward projection, and let's see what that looks like. And then I show people how, if you want to be in a growth mode, how much cash that's going to need from you, right? You want to be in a steady, just cash producing mode. What does that mean? What are the different tiers that we have? And you can be informed based off of your break-even period. How long does it take you on average historically to break even? We say, okay, great. Based off of that, if we've got a 2-month break-even period, then we know if we need to maintain cash, we probably shouldn't be scaling every month. We should be scaling every 2 months. And understanding how that plays into your whole business and where that works. And so I think I don't want to put blame to point fingers at any agency. Quite the opposite. I think all of these agencies out there, they're experts in their little fields, right? But I think founders need to be better educated on how does all of this come together and not rely on agencies to solve those problems, because agencies, that isn't their business. Their business is to go run Facebook ads. Their business is to go run Google or TV or whatever it may be, and that's what they know how to do. So it's the founder's job to know and understand how do we run the whole business from top to bottom and what is the most important piece. And I think that's what we come to the table trying to help do and really teach and mentor, tying this into the theme of today's conversation, is really teach and mentor those founders to understand each of those metrics and the data points they should be looking at.
And I think in the vein of connecting dots, because that's really what we're talking about here, is allowing leaders and owners and founders to be able to connect the dots in their business in ways that maybe they didn't even know what were possible. Yeah. But I think if we go one step further and we say, okay, what caused you to feel the need to develop your own proprietary technology versus, say, some of the BI tooling that's out there in the industry? If we look in the Shopify App Store, there's probably 25 BI, data visualization tools, etc. Most ERPs will have some form of data visualization layer. They'll have some form of demand planning layer. Each system has its own not only data set, but it's in the way that it presents this data back to you in some kind of actionable way based on the data it knows about. You obviously felt there's nothing out there that, because if you look at a Glue, or you look at, again, going back to the Power BI example, or Clar, or there's a number of different pretty well-known D2C BI tools out there in the market. But you obviously looked at these and you said, this doesn't quite get us there. This is not what I'm looking for from my clients, and therefore I actually need to go and build something.
Yeah. And so what I'll say to you is all of those tools give you everything. And so they give you a smorgasbord of, you want to go and pull the specific order level and look at a specific customer. They allow a founder to go, or anybody to go, all the way down the rabbit hole. And that process is counterintuitive to running a business to scale. And so what I looked at this is, I said, we need to pull that away. We need to pull founders away from those level of details. And also those tools also allow people to answer questions that are those obscure questions that are not necessarily going to be driving profit or enough scale that it makes sense. And so what I basically said was, we need to cut the noise, give you very clear, here are the things you need to look at. Here is why you have to look at it this way. And here is this number that's not bullshit. It's a straight off important number that you need to know. I'll give you an example. When all of these tools out there that are visualizing subscription and your subscription churn. Now, churn is how many cancellations you have per month, or whatever period you're looking at. And you take that percentage and you say, here's my churn. Now, if you trust these tools out there to tell you your churn, what they're often doing is telling you had 100 people cancel, and you have 10,000, or let's just say 1,000 customers that are active customers, so your churn is 10%. Now, the question you have to ask yourself, is that going to tell me now that next month I'm going to have 900 customers that are going to charge and I'm going to have more money on that side? Or was the 1,000 customers they told me were active, only 500 of them actually got charged this past month because they're on a bi-monthly cycle, they're on a quarterly cycle, maybe they're not frequently. And the 100 people, if let's just say 500 of them were actually on a quarterly cycle, a bi-monthly cycle, and not being charged this month, but 100 of them that canceled were, now we can say, oh no, your churn is actually 25%, not 10%. Because if the whole point of churn is to predict your revenue, when is the next time I'm going to get paid again, and understand this person canceled, then now I've got to boil this down to simplify it for you and say, the value of churn is to know when I can expect my recurring revenue. And if I look at it and say my churn is 10%, then I'm going to think, oh great, I've got 10% churn, I'm going to have 900 charges that the next month, I can overcome that easily, and we can continue scaling, and I'm going to be a billionaire in no time. But if the reality is that your 100 people canceled out of 500 that were going to be charged, now you've got a churn problem. And you have to solve it. And if
now I've churned 20%, right?
Exactly. And you have to look at that, and you have to say, hey, which one number is the important number for me to be paying attention? Because if I have a churn problem, it's very different than if I look at it like, hey, I'm only at 10%. And that's the piece where I looked at this and said, we need to hone in on the specific numbers that are extremely valuable to businesses, and not just give them everything else that's out there. And you look at tools also like Power BI, you've mentioned before, that we can be building out custom dashboards, and it's a lot of expertise to build that all out, and there's a lot of just modularity in all of these tools, and I don't want to give founders another problem to solve or another thing they have to be experts in. The whole point of this is to give tools so that day one they can understand, they can act, and they can keep working, and that they work with me and they work with my team to help advise and say, this is truly your number one priority.
And it seems to me that one of the things you're also trying to identify through the data is anomalies, meaning that, hey, we're tracking along and here's a trend, and it may not be skyrocketing, but it's up and to the right, and we've got this really consistent trend over 18 months. in whatever metric we're looking at. And all of a sudden we have an abnormal month that just comes out of nowhere. It's completely unexpected. And we need to actually try to delve into that one a little bit deeper. But if you're not tracking over a significant enough period of time and multiple time series, particularly for businesses that, for example, are seasonal. For example, if you're not tracking multiple time, and this goes back to stocks and technical analysis and a few other things that I've dabbled with over the years, is that if you look at over multiple time series, you start to identify trends within time series, and that can be super useful in identifying the anomalies, so that then, okay, know that whilst that looks like an anomaly in a short time period, in a longer time period, it's no longer an anomaly. This is something we see every 12 months with routine, monotonous consistency. We don't need to worry about this. This is not an outlier. This is something we don't need to think about. Whereas other things you do want to look into immediately. If, for example, I've heard of people having, for example, their Facebook account hacked, their Facebook ads account hacked, and all of a sudden, from one day to the next, their ad spend goes 10x and their account gets cut off because they've hit their limit, and now they can no longer run Facebook ads. But if they're not tracking these things in a meaningful way, then all of a sudden you can't identify the anomalies, which means you can't act on them.
That's right. I get an email every single morning of exactly that. It identifies anomalies, and those anomalies are. I get it for all of my clients, and I look at across the board what are those anomalies, both on the low end as well as the high end. Are they spending too much? Are they spending too little compared to what they normally do in those seasonality elements? Is revenue in a channel up or down in that level? And that's exactly right. Then I get to look at that and say, hey, there's something here. Let me go and reach out to that client and see what's going on. And what do they need to know? Because to your point, those anomalies are critical. And on the high end, when revenue is going fantastically, chances are the reason why we're happy about those anomalies, right? Because that means we're doing something in a strong piece, if we're profits there. But I would say on the other end, if they're asleep at the wheel, you have to hold them accountable. And that's really critical, exactly as you say. We have to lean in and understand those anomalies, and also know, hey, this is an anomaly I don't have to pay attention to. This is okay. Let me forget about it right now.
And you mentioned off air, and I'd love to dive into this a little bit deeper. You said to me, look, my question was to you, is this something that you think your vision for your platform and your technology, you say, within the next 12 months or 18 months, I want to productize this. I want to turn it into a SaaS platform that's plug and play. It's self-service. It's got all these default reports in it, and businesses can act on it. You said we could do that, but I don't see us doing that. And I see us remaining as a sort of a white glove service provider that brings technology to the table. But because we built the technology, we understand the technology better than anyone else. And therefore, we can bring not only the tech to the table, we can bring our playbooks and our knowledge and our experience and our understanding of your business. We can marry those two together in a way that kind of would be almost impossible with a pure self-service SaaS platform.
That's spot on. And I think there are all of these tools out there. And what happens with these self-serve tools is that they eventually get acquired. They get sold to some other business, and then they get shut down, or they get integrated and they're not done in a strong way. And I tell this to people: I've had my acquisition. I'm happy. I'm in a strong place on that side. And at this point, my mission is to support the community, to build relationships, to help each of the founders that we work with build those strong and profitable businesses. And yes, I think it is important to have that education piece, where I view what we're doing as teaching, and we're supporting you through that coaching and teaching method with tools, whatever those tools may be. If you have a health coach, your health coach may tell you, hey, I want you to wear an Oura ring or a Whoop or something like that. Why? Because it gives them data to track and understand how to support you through that. And I view our platform as like the Oura ring and the Whoop. It allows us to track these metrics, to see where the numbers are up and down, so that then I can help and then my team can help support and coach you. And coach people through the business and the growth for across the board. And that's what's really exciting about where we sit, because nobody's doing that. Nobody is there. They're basically saying, here's a YouTube video for you to go take. Here's a new tool, a new shiny object you should go install. And we're looking at this and saying, No, let's help companies go and break through that $100 million barrier and just scale and get to that point.
And as we're coming to the close of our time together, I really appreciate all the knowledge and wisdom and experience that you've shared with me today. You said to me, look, we target businesses that are say 10 million to $100 million. They're not a large corporate. They're oftentimes privately owned, oftentimes founder led. They're still young enough. They're still hungry enough. They're still scrappy enough that they really want to do something special in the market. Maybe you can speak to that a little bit in terms of where you do your best work, but where the types of brands that really benefit the most from adopting a more data-led business model.
I would say that companies doing $1 million or $2 million in revenue, they're figuring out their market fit. They're figuring out if their product is working or not. And at that phase, I'm not helpful. Why am I? Maybe I am, but I'm not very helpful because you're still figuring out the product. You're figuring out the market at that level. Once you get to that $10 million, $5 to $10 million range, we then can come in and say, okay, great. Now let's understand and slice and dice this in a meaningful way to help you get from that level up to 100. And the reason why that's the sweet spot in that range, that probably that $10 to $50 million to help you get to that 100 side, is because at that point, you've gone from being a product manager, building out a product business, and you're not sure the next data that you need to get to. And you're not sure where all of that is and the infrastructure you've built out. And so we get you a jump start to help you get to that next level pretty quickly, as opposed to the $100, $200 million businesses that are out there. If they got to that level, they already have they probably have an engineer on staff. They probably have all this tech involved already. They may actually have already staffed out 10 people planning for their $1 billion. And I look at it and I say, that's a business that I'm not looking to try and crack into. Those people are solving important problems, but those problems are going to need an entire team, and they should be in-house. And they should completely be in-house because they need experts that know their product and know their business like nobody else. As opposed to in that middle range between that 10 and 100 where they're still working through it and we're still figuring it out and building it out, we give people a jump start so they don't have to go and build it out for themselves, and that they can have this entire breadth of knowledge and we let them move forward.
And I guess what effectively you're saying is you guys can act as effectively a fractional data analyst, a fractional data scientist, a fractional data engineer. You guys you're effectively not hired as a full-time FTE resource. And as a result, when you get to $100 million or above, it feels like the volume of data that they're working with jumps up quite dramatically. And it justifies at that level also having someone not on a fractional basis, but literally on a full-time basis working on just your one brand or your suite of brands if you're a multi-brand retailer, and digging deep as opposed to broad, and really getting to know every single little nuance that you're done pulling the big levers at that stage, because otherwise you wouldn't be $100 million. Now we're in some cases pulling micro levers, but because we're acting on such a large cohort of data and such a massive gross revenue model, now every little change results in quite significant outcome differences for the business.
I think that's spot on, and that gives you so many more levers you have to pull. And it doesn't change that there are similar levels that you pull when you're in that $10 to $100 million range. But as you said, they're bigger. They feel bigger on that side, and we can make major changes to get you to that level and to do that. And I'm excited that we're helping so many brands do that right now and supporting them through their growth phases and to get to these next levels. And I hope to continue doing more of that.
And what would your sort of parting advice be if a brand is, let's say they're at that $10 million mark and they're a D2C brand or they're a B2C brand, or maybe they're a hybrid and they manufacture some things or they wholesale some things and they retail other things, and they maybe are just using Google Analytics, or maybe they're using some sort of attribution tool like a Northbeam, and that's all they have, plus their traditional Facebook ad manager data, maybe combined with some of their Alphabet data, their Google Ads data, but they don't know where to go next on their data journey. what would your kind of one, first, two, three, regardless of whether they go with you or somebody else or different technology, what would be the first 2 steps, 3 steps they should be looking to take apart from these disparate pools of data that they're maybe looking at? Let's say they got a performance marketing manager and all they worry about is the performance marketing data because that's what they're KPI'd on. They got a full-time staff member thinking about that, and they're doing nothing but thinking about how can we extract maximum performance out of our performance marketing ROI from an ROI perspective, but they've never started to think about all the other interplay of all the other levers. What are some of the first steps they should be thinking about taking next?
Yeah, I would say number one, knowing what your true gross margin is in order for us to build out a contribution margin net of marketing, right? That is so critical to understand so that it factors in, as we said before, the returns costs, the fulfillment costs, all of that. That has to be step one so that we can have a true number. In order for us to then understand, number two is your break-even rate and how long it takes you to break even or how much money it does. So for example, it's a very simple formula, right? What is your break-even period? How much revenue do you need to take it to break even? It's simply your cost of acquisition, so $50 cost of acquisition divided by your gross margin. That will give you straight off how much revenue do you need before you break even and you start to make a penny at profit. But you can't do that unless you know what your true margins are. And so 1 gives you number 2, then number 3 says, how long does it take me to get there? And does that take me 1 month? Does it take me 2 months? Does it take me 3 months? Does it take me 4? We can answer those 3 questions as step 1, step 2, step 3. Now we know what your runway is. Now we know your profit. Now we know how to build a scale plan for you. And then we start to go all the way out from there. But if you ask 1, 2, 3, what are those 3 things? That's them.
Wow. Absolutely love it. Jordan, you've been a phenomenal guest mentor. It's been super enlightening for me, and hopefully it's been enlightening for the audience. If people want to get a hold of you and learn more, where's the best place to do it? Is it LinkedIn? Is it your website? Where's the best place to get a hold of you?
I think either of them. You can go to linkedin.com/in/Salvit or salvit.com. You can email me at jordan@salvit.com. Any of those will work. I really appreciate, Jason, for you having me on the podcast today, and I hope that your listeners did also gain some value as well. And thank you so much.
If you'd like to get mentored by Jason for free, head over to greenwoodconsulting.net, scroll to the bottom of the page, and click Get Mentored by Jason.